Hey everybody, David Bartosiak here with Zacks Momentum Trader. Wanted to go over our chart of the day that we had on Friday, which was the New York Stock Exchange bullish percent. First, how do I get there? Stockcharts.com. There's a few free online resources you can use. This one's pretty good for point and figure charting, which is how we did this New York Stock Exchange bullish percent chart. So if you click over here, near the middle of the screen, you can add any ticker that you want. In the case of the New York Stock Exchange bullish percent, I always forget what it is, but if you forget it, you can do this quick search over here on the right side of the screen. But since I just did it, I remember it's BPNYA, New York Stock Exchange bullish percent. So you click that, and go, and it's going to pull up your standard kind of technical analysis. Here we've got moving average, convergence, divergence on the bottom. Got a few moving averages plotted on the chart. RSI up at the top here, but I'm really not going to look at this as if it was a stock per se. So this kind of analysis really doesn't do anything for me. So I'm going to scroll down here to the bottom and click on the point and figure chart. Now, point and figure charting goes back to the beginning of the stock market in the U.S. here. Basically, rather than having each one of these bars here represent a day or something like that, it's solely based on price movement. That's why in here you see these little numbers, this 8, this 9, this mixed amongst these X's and O's. These are for the month when it happened. So basically what happens is, if you look at this second column here, boom, you got 9, right? So that's September. So in September, this got down to 44. Sorry about that. In September, this got down to 44, and kept on going down until it hit 34. Then we had a reversal back up, so the stock price, or in this case, the bullish percent started going back up. Got all the way up to 52. Whoop, started coming back down again. Boom, and you see the A here. This is October. So, in October it was all the way down to, this is October 2008. Got all the way down there. You guys should, we were talking 2008, the market wasn't doing too hot, right? Got all the way down to 4, which is a total extreme level. Now what this bullish percent is telling you is what percentage of stocks on a New York Stock Exchange are on a buy signal versus how many are on a sell signal. So looking back in 2008, October 2008, what this is telling you is that only about 4% of the stocks on the New York Stock Exchange were on a bullish, on a buy signal. Obviously, if you have, when you have that, then now you know that there's, it's got to come back the other way. It went to one extreme, big time, so now it's got to kind of swing a little bit back. So you're going to see market tops and bottoms when these conditions are at extremes. Everybody remembers, or at least I hope you remember, March of 2009. That is actually the bottom of the market. So if you look here, we have 3 is March. We're in 2009 here, and it looks like we bottomed out at 12 on the bullish percent. So something important to note: you're going to see this at major tops and bottoms, but just because it happens doesn't mean you've hit that major top or major bottom. But this is kind of one of the prerequisites, in order for that to happen. So that is pretty indicative of a market bottom there. And then when you saw the bullish percent change so much, so fast, that was kind of confirmation after the fact. But more relevant to today, everybody's worried about the overbought condition of the market. Things are getting a little bit too toppy for us. But really, if you look at where the bullish percent is, we're at 64 right now. That's not that extreme at all. We want to see 80s really before you have any sort of major reversal or major market top, and we're nowhere near that. So what does that imply? That implies that we've got a little bit more gas in the tank right now. The market could be headed higher, and really the way that this market is unwound, it's been pretty sleepy, just kind of a creep up through to new highs. It's not a huge spike up. There's not a lot of volatility that's taking place. So it's kind of slow and steady, just accumulation that we're seeing in the market. I've been seeing in a lot of individual stocks, definitely some of the names that we have in the portfolio. So as long as we've got QE happening around the globe, it might not be here in the U.S., but It certainly is in coming from Europe as well as Japan. So something to keep an eye on. But as far as the bullish percent goes, it is still smooth sailing. Thanks a lot, everybody.